Hey there, my friend and fellow trader. It's Will here over at XAUUSD.com. First of all, welcome to the video. What a week we just had with both the weekly and daily services. And in this video, we're going to go over the huge 1200 pip week and nearly 2000 pip for some clients. In this video, the trades that absolutely smashed it this week. So before we get started, if you're new to my channel, simply hit the subscribe button now. And let's get into this week's results. What we're going to look at is only in this video the weekly trade setups. Okay, so it was quite an eventful week. You can see the results we had here with the normal service. And there was nearly 600 pips worth of manual entry trades, and we'll go over them also this week. So we did close half our positions out on Monday. So the Aussie pairs absolutely tanked it this week, Aussie and Kiwi pairs, and we closed out on Monday for 50% profit and let the rest run till Thursday, which we closed the rest of the position out. Okay, so these are the final pip counts, 670 pips, and plus the manual entries would have been nearly 1300 pips if some of the clients were taking the manual entries. And in the daily service, we made around 500 pips. So nearly 1800 pips were for grabs this week with the trades that I have sent out, which is phenomenal results for a week. And it kind of tops off what has been a phenomenal September. In total, nearly well over 2000 pips banked this month. So great results. And let's get into the actual trades and why I was looking to take these positions where they were. So the first one was on the USD Japanese yen. Okay, we're going to locate that on the dashboard here, and we'll open up the chart. Okay, let's remove that indicator because it was building a new dashboard for high lows. So just go across here. Okay, so we were looking to enter this at 1042. And again, this is just based on, you can see these huge lows here. You've had a bit of another rejection here, and rejection here again. This was last month, or sorry, I think this year's low. No, this was this year's low. So July's low. Okay, market took out that low this week and then rallied up. It was at this area here, the daily chart. It's kind of been tested a few times. If you look at the weekly, actually, you can see it's this huge weekly area here. So this is a very nice support line. I was looking to take this trade. You can see we actually got a 4-hour daily divergence early last week. Monday it popped down for us, 1042. We entered the trade and it absolutely took off all week. Okay, so we got around 100 pips on it, which was a nice result. You can see down at this area, right where we were looking to enter the position, we had a 1-hour divergence for a manual entry trader. That was perfect. Okay, lines up everything daily inside the weekly at a strong support line. Lower time frame signal, which is the bullish divergence, and up she went, pop. So that was a nice trade in the USD Japanese yen. The next one was USD Swiss franc. Okay, this was a manual entry. Okay, I don't include this in my pip count because it was again a manual entry using my method. Okay, it did come right down towards our entry, which was okay. We're looking to trade this. We're looking to enter this week at 9,700. That was where the pending order was. It didn't happen. What did happen was a nice bullish divergence just at that area here, and the market went up. So it was a nice manual trade this week. The reason for taking it, again, if we look at the monthly area, and we're at this. I know we have this huge spike down from 2000 and start of 2015. Okay, this was holding here. If we look at as prices approaching this support line, market is slowing down. Okay, you can clearly see the market is getting rejected here. This level is getting a lot of rejection. So the next logical step for this is a rally to the upside. Okay, after a drop in price, just move these. I don't know why those pivot lines always show up in this, but I'll just take them off. Okay, so we had this huge drop in price, and you can see, like I want to talk about in most of my videos, the change of structure at the bottom of this move. You had this huge final drop down into this level, and the market starts moving sideways. This is what you call a period of accumulation. After a huge drop in price, the market will move sideways, and you can see the divergence signals we're getting here in the daily charts. Okay, price popping down, new low, pops up, pops up. Finally, it breaks out this week of the area of accumulation. So early next week, this could come down to test this area and then rally it up. Okay, you can see we're now outside the period of the daily accumulation. So structurally, I am saying this is now in an up move, and we look to buy the USD Swiss franc if you are a day trader or a swing trader. Trades to the buy side would now be the best bet. And you'd be looking, targets would be opposing zones that cause new lows. Okay, pretty simple. You can see this nice pause in the market here. We'll also see that a lot clearly in the daily time frames. Okay, if I was looking to sell this pair, it would be in here. Okay, we've had this swing low here, this swing high, and then this was the start of this huge leg down to where it caused a period of distribution. So that's the kind of the market's going to be targeting that area. Early next week, we could get a retracement back down to the breakout line of the period of accumulation, and then a move back up to the upside, which would be a nice target in and around this area here. And likely it's going to line up with a fib from this move down here. We'll just double check that. Okay. Fibs. Okay, so in and around that area is 61.8 fib off this leg down here. So that's a nice area to be selling again, also targeting this up move here. Okay, so that was the reason for that trade last week. It was a manual entry. The pending order missed it by 10 pips, but our clients are told to look out for this here when a price comes near the zone from our pending order. It is good if it's within 10 pips or so, and you get a divergence signal. So that was a nice 200 pip move on that position, which was excellent. Next trade was the British pound Kiwi. Again, another manual trade that popped down on Monday to our within, I think, 10 pips of our entry, and then huge rally up all week long. Huge rally up. Okay, and this one nearly 400 pips were targeted on this. Again, if we look at the monthly time frame, we're at this area here where the market is coming down, and test there. We had this downtrend here, down leg. This area here broke the trend. Okay, this moved to the downside. This area broke this trend, comes back down pretty strongly. This is telling me the strength of this move down back into this area that broke the trend. We're going to get a huge reaction here. That's why I've been looking to buy that at this pair. And you can see again change of structure after this move down. As it's approaching this area, as it just enters the area, you can see a lot of rejection on the daily charts. And if we zoom into the 4-hour charts, and zoom out a little, you can see the sideways movement after this huge rally down. The first pop, change of structure. We had the gap down. When you actually see this kind of price action here, gapping down into a level, it is a strong, especially a strong bullish or bearish sign. When it's, in this case, it's a strong bullish sign. And if it was the upside, we had a gap up, it'd be a strong bearish sign. Okay, the reason being we're going to gap down into the higher time frame institutional buying area. Okay, also last week, I think the start of the week, we had a bullish divergence. 3-4, that happened on Monday. And you can see Monday morning, the first few hours, it came down within 20 pips of our entry. And if we look at the 1 hour charts, we had a nice bullish divergence at that area, and the market goes up 450 pips. Okay, so that was the reason for the manual entry on it. Okay, pretty basic trade. Trend that leg down, area that breaks the trend, comes back down the test area that breaks the trend, and huge pop up to the upside. Everything's telling me there, price action wise, that the market is ready for an upward move. And again, probably get a bit of a retracement next week, and then it'll continue up higher to reach. Again, if this should be the target here, this last high, and if it is a strong trend to move to the upside, this level will get taken out and the market will target a new high. Okay, so longer term progression of this trend up will take out this high here at 202,700 and probably target these higher time frame areas up here. If you even look at the monthly chart longer term, we got this sideways movement here, period of accumulation. This area broke the accumulation period, broke out of this range, comes back down the test area that broke the range, and then this is likely a move, huge move up to the upside. Okay, so we could be in for some good news regarding Brit exit, maybe a deal, and this would be the catalyst for a huge move to the upside on the British long term on the British pound Kiwi. Next trade into the trades of the week. Okay, Aussie USD, excellent trade this week, more or less come up Monday morning, hit our entry trigger and tanked the whole week. And let's get into the price action. Okay. Again, the reason we have those high lows, I've actually built a new dashboard to show you that now. So this is the high-low dashboard that I've built. Okay, I'm just testing at the minute any bugs, but it actually in an instant shows me all the highs and low, previous highs and lows of the daily, weekly, and monthly time frames. This gives me a good indication of trend strength, ranges, and volatility in the market. It's an excellent tool if you like to trade breakouts of swing high, swing lows, or rejections of swing high, swing lows, because usually the weekly and monthly swing highs and lows are strong support resistance areas, and institutional traders do target them. They do like to pop the highs and lows, and then the market will get rejected at that area. So that's a great dashboard, and I will make a video regarding that very soon. So let's get into the Aussie USD. Okay, we're at this area here on the monthly charts. We'll see this a lot clearer on the weekly. Okay, this was kind of the period here that was the start of the huge move down. That, well, this is the area up here, but this caused this low down here. This caused this, so we'll get rejection, and the market is moving down. Okay, so we're looking at a test of this area. We have this huge leg up here. Okay, again, as the market's approaching this area, what we see is the market slowing down. We get divergent signals at this area. The market slows down. We actually get the initial, if we look at this here, move this over. Okay, we actually get this area here that broke the trend. The market comes back up the test area that breaks the trend, and then tanks down. Okay, so this week we were looking to take this trade at 7,300. 73300. Sorry, and you can see from more or less the word go on Monday, this pair absolutely rocketed, tanked. Okay, all week from the get-go on Monday morning. We took this trade and it plummeted nearly 300 pips. Okay, from where we got in. Okay, well, 200, yeah, maybe 300 pips. Okay, Monday we closed out half the position, left the other half running, and it absolutely tanked the rest of the week. So that was a great trade on it. Next one. Okay, this was the trade I gave you free this week in the Telegram group. Was the Aussie CAD. This was the perfect trade entry. We'll just get this up here. Aussie CAD. I made the video on this last week. And we're at this monthly leg start here. Again, I explained this in last week's video. Okay, market slowing down as it's inside this area. See, nice period of distribution, market moving sideways. It is right at the bottom of this range of distribution. I do expect this to continue down. I don't know why they keep on showing up. Okay, so I do expect this to continue down. Maybe a short-term reaction here early next week. It'll rally back up and then a huge break. And targets on this, like I said last week, would be around the 92 area, further on down towards 91, and then a longer-term retracement down towards 86. But I think I like the 90, 91 area for the Aussie CAD. So that was a perfect trade this week. I hope you actually got in on that. Next position is on the Kiwi USD, another brilliant trade this week, and that's actually the last trade of the week. If I can find it, Aussie Kiwi. Okay, and it absolutely dumped. You can see how strong these divergence signals are when they happen inside those higher time frame weekly and monthly areas. Okay, again, perfect price action setup on Aussie Kiwi. Okay, we have this leg start here that caused this low, back up, to test this, back up to test it again. Look for evidence of price action slowing down. You can see this nice rally, and you can see the actual rallies here. A lot of rejection starting to happen as it's approaching this weekly area inside the monthly. Also, as it's approaching this resistance area here, you can see the rejection here before in the weekly charts, and again it's getting rejected here. Divergence signals happening at this area, market moving sideways, and we're right at the bottom of this period of distribution now. Okay, so I do expect this next week to continue down, but maybe Monday, Tuesday we will get a relief rally and then a move back down towards maybe longer term. Could target this area or low that was taken out in this area here, this around about the 63 area could be a target. So 61 between 63 could be a target for this. Also the 64 area would possibly be a nice buying opportunity, because never know, Monday morning this could gap down, test this 64 leg area, this leg start area here. The reason this is a leg start, you have this swing high, swing low, new swing high. Okay, and around this area here. Okay, this was the start of the accumulation period, or sorry, the distribution period, and the move to the upside. So it was an excellent week. Plenty of pips banked. Again, 500 on the daily service, 670 on the weekly service, and nearly 1800 pips in total, 600 if you were trading manually. So you can see our service actually pays for itself. September has been a fantastic trading month. See, the week before we had 690 pips. Week before that we actually lost 160 pips, and the first week of September we managed 600 pips, and that's not adding the weekly service. Okay, so again, in total there was nearly 3,500 pips up for grabs this month using our service. I remember we guarantee you a minimum of 900 pips every 90 days. So you're looking to a professional Forex signal service that gets results, shows you exactly what they do. They practice what they preach. Then simply click the link below. If you have any questions, let me know. Will at xauus.com. And yeah, so I shall see you on the next video. Have a fantastic weekend.